Hey traders, welcome to Charts and Coffee. Great to see everyone. Happy Monday morning. Happy beginning of the week. We have some interesting data coming out this week, as if every week hasn't had something interesting or impactful. But this week, we do have the PCE. Now, the PCE is the inflation metric that's built into the models that the FOMC uses to determine whether or not they're winning the war against inflation. And so while there are other metrics that refer to inflation, the one that is most important to Powell and Company is the one released this Friday at 8:30 a.m. So that's definitely something to keep an eye on. Another thing that we're going to keep an eye on as we go into Friday is really the beginning of what could be considered an extension of the window dressing rally that's been going on in December. This is not an unusual tendency. It's certainly even being more fueled by dovish expectations in terms of rate cuts, possibly in March, most definitely by May. And when we have a dovish environment where the Federal Reserve, the FOMC, by the way, those two terms are not, as much as those two terms are used somewhat as a synonym to each other, they're really not. There's the Federal Reserve and all the members and all the things that go on within this governing body of monetary policy. But then there's the 12 members that actually vote on what's going to happen with rates. And it's the 12 members who determine, what it is that's being communicated during those FOMC meetings. So the FOMC is going to make a decision about rates, and ultimately, that saying of don't fight the Fed is so true, right? It's so true. And if we don't want to fight the Fed and we have dovish monetary policy coming, right? That's what's being discounted into the Fed fund futures. That's a futures contract that speculates on what they're going to do at each of the one of 8 meetings, right? We are going to see rate cuts, gang. And if you're wondering, does the Fed ignore that? They did once. They did back in Q4 of 2018. Powell will not do it again. Go take a look at a chart of Q4 2018 to Q1 2019, and you will see that before we had the sell-off of 2020, that was the most violent sell-off we had seen in modern markets. I don't think Powell's going to do that again. So with that in mind, history being a lesson here, let's build our positions with expectations that yields are going to continue to drop and that equities are most likely to continue to the upside. All right. So that's what we've got going into December. That's, overall what we've been dealing with. And you might say, but Rog, they've been hiking all year and the equity markets have gone up. This is true. What are the chances that they could start to cut and equities go down? Not very likely, because remember, I think most market participants know the only reason to hike rates is so that you can cut them in the future. And with equities rallying throughout 2023, there were many reasons for that, but some of it is simply what is already expected, right? So yes, to a certain degree, we are expecting these rate cuts. So I'm not expecting come March or May, when we get a quarter point cut, that the markets are just going to take off. They're doing that in anticipation of. So that's definitely a reason to remember. There's an old saying, buy the rumor, sell the news. It applies here as well. All right. So as always, gang, the best part of our show are your questions. Let's go ahead and jump into them right now. Delta asks, do I at all compile a trade a bearish part of my watch list in an environment like we are right now? Delta, there are reasons to look at weak sectors and stocks. Now, by weak, I'm defining that as one of two things, either in a downtrend or below the first trading day of the year and the 200 propulsion. So that would be a stock that's negative on the year or a stock that's in a downtrend. If it's both, yeah, there's a good chance it could continue to see weakness. But when we have a Santa rally and dovishness, the larger list, and dare I say the more predictable list, will be to buy the dip. Because even those sectors that would largely be considered bearish, like the regional banks, are in fuego. So the bottom line is, Delta, no. I think there's far more productive trading to be done by not shorting into new highs, and by not looking for tax loss harvesting broadly and being bearish. And I know what everyone's going to say. Aren't these markets overbought? Please do yourself a favor, right? And I'm telling you this only because I've made similar mistakes way back in my career. Uptrends are not ever overbought, right? Trends are an actual natural imbalance. So overbought is just a fancy way of saying, well, this uptrend's too high. Well, when was it too high? Was it too high on the 20th? Nope, it wasn't. Was it too high on the 1st of December? Nope, it wasn't. Was it too high on the 12th of December? Nope. So remember, it's just one of those things where traders will wait, and it's a revenge trade, right? I've not been mincing words lately about some of the things that have hurt traders and cost them money throughout the year, only because when I do, I'm actually just hurting traders who are really trying to learn how these markets work. Please don't consider uptrends ever overbought. Are they going to pull back from time to time? Yes. Don't try to predict that. That's picking a top, right? What we want to do is ask ourselves, hey, let someone else go out there and stand out in front of the freight train. Good for them. On those occasions, they're right. Believe me, they're going to be wrong more often than not. But let's buy the dip, which is going with the flow of the river, right? Can you swim upstream? Maybe for a little bit, but the river's going to win. The same thing goes with trends. And so that's why, Delta, I don't want to be a bear, right? I don't hate my money. Okay, so next up is, what do we have here? Hang on, bear with me. Will it be a holiday special on Sector Secrets? Will it be a holiday special? Oh, are we going to have sales? Oh, I have no clue. I don't handle that stuff. We had that big cyber sale. I don't know what's coming up next, but yeah, no clue, Mark. Have the confidence to buy the dip. Yeah, and by the way, Mark, at some point, I am sure we'll have a year-end sale. Yes, I'm sure we will. I don't know what's going to be on sale, though, my friend, but I'm sure we will. I'm sure we will. So have the confidence to buy the flippin' dip, right? Says Dave. So where does the confidence come from? And you bring up a really good point. Where does the confidence come from to buy a dip? And confidence is going to come from structure. When we can see something behaving in a way that our eyes and brain say, yeah, I've seen this before, and it looks like certain behavioral patterns are repeating themselves, that's where confidence comes from. You understand it, and then it just keeps happening. And at some point, that's where we say, hey, I do want to engage the market in the context of an uptrend. Buy the dip comes best in uptrends. And uptrends, regardless of how you define them, have to be done objectively and preferably in more of a real-time manner, because a lot of folks will say, oh, look, 6 months ago, 2 months ago, fill in the blank, these moving averages crossed. But if we don't have the confidence to act at the time we see the signals, then it's just always going to be analysis and not trading. And those are two very different things. So we use a real-time process, right? What do we do in the Sector Secrets Mastery? When we want to have the confidence to buy the dip, we use 4 exponential moving averages, and then we further just turn it into a traffic light. Green means bullish, yellow means neutral, and red means bearish. And I can measure the momentum, and I can measure the trend with those moving averages. And that's what you all will see at the bottom of every one of these charts. There is a momentum gauge and there is a trend gauge. We make it really, really simple to understand if something has momentum. Right now, there's 1,000 different ways you can describe momentum, but it's near-term movement, right? Trend is different than momentum. Typically, when the momentum is bullish, the trend will follow suit, but one will typically come before the other. And when they're both bullish or when they're both bearish, you're going to have really good structure. And that's where we sit, in the S&P. That's where we sit in the NASDAQ, right? So where is the confidence to buy the dip? S&P, NASDAQ, most of the Magnificent Seven, but not all. Tech, you'll see here, communications, even consumer discretionary has followed up. It's been lagging most of the year. Semiconductors are the number one sector in terms of relative performance throughout 2023. So those are going to be places where if we can buy the dip, we will, right? And the confidence comes from uptrends. All right, next up, Penelope asks, is there a good way to see the previous session close if the market is already open? I try to mark it before the open, but sometimes miss it. Penelope, no, that should not make a difference at all. Here's a chart of the ES, right? It's already open. We're already trading the December 18 candle, right? So that's this candle on the right edge. That's the December 15. So just put a line on the close for the candle before, right? That's all. So as far as the new candle starting, don't worry about it. It's not the new candle starting that's going to affect anything anyways. Just go back to the candle on the 15th and mark the close there. All right. Easy fix. Easy fix. Cindy asks, is January going to be a bearish month? Gang, I know I will have not failed you all when you stop believing anybody knows what the future is going to bring. Up until then, I've got to keep working, and I'm happy to do it. Cindy, thank you for the question. Nobody knows what's going to happen. Please, gang, I know you want to know, right? I know we all want to know. I want to know what's going to happen. But nobody does, right? We do not know what's going to happen. Now, there's some jerk out there, and I do mean jerk, who's going to answer that question, Cindy, and they're lying to you. They're flat out lying to you. Nobody knows what's going to happen. So I say, trust yourself, trust your analysis, manage your risk, because nobody cares for your money more than you do. I like to think maybe I'm a close second or third, but nobody cares more for your money than you do. There's a whole group of market participants whose job it is to expound what they think is going to happen in the future. What I'm going to say, though, Cindy, is as long as we have an uptrend, I'm going to buy the dip. And when that trend starts to falter, so my green colors go yellow or even red, I know now that the structure of that uptrend is starting to get wobbly. And in a wobbly environment, perhaps we start to open the door to doubt. And where there's doubt, there's top pickers, and there will be people that want to trade into that stall or doubt or uncertainty, right? But until that happens, I'm not going to top pick. And there are places that are a little bit more weak. There are places that are in downtrends. So let's also remember that we don't want to talk about markets, right? That's a habit that even I've been trying to break. I don't want to say the markets because that's such a nonsensical thing. When we talk about the markets, believe it or not, most people are talking about the S&P 500. And yet there are indices, currencies, treasuries, metals, right? Energies. And then there are different sectors. So I try to even kill that lingo in my vocab by saying, look, are we focusing on a sector? Are we focusing on the indices? Are we focusing on treasuries? What is it? So if you ask me, could crude oil continue lower in January? I believe that would be a yes. It's in a downtrend now. And until that downtrend starts to wobble going neutral, I'm going to presume it's going to continue on that path, right? If I'm taking a look at energy stocks, also pretty bearish. We've had small periods of neutral, but for the most part, it's heading lower. So I'm going to presume that until proven otherwise, we're going to continue to work with the weakness and slight chop. But if someone were to ask me, what about the NASDAQ, Rag, or what about semiconductors? I'm going to, again, presume that the strength in those two, one's the index, one's the leading sector of sectors, I'm going to presume they're going to keep going up until they wobble. So really, really important to remember, let's just focus on what's happening now and then letting that focus into what is probabilistic. Yes, knowing that there's no certainty in the market and knowing that no one can tell the future. And that's a tough thing because when you turn on television, you have nothing but people who are clearly telling the future. What a gift. I haven't had that gift in 30 years. If I was an X-Man, though, I'd like that to be my superhero power. Yeah, no doubt. No doubt. All right. So BLP asks, how much of a drop would indicate a dip. So BLP, it depends on the time frame you're looking at. So if I have a 5-minute uptrend or downtrend, so since we're talking about dips, we would look at an uptrend. Do I have any uptrending 5-minute charts right now? I do not. So let's say we have a 5-minute uptrend. I might look at a dip being, and it's a great question you ask, what defines a dip? Now that's going to vary from trader to trader. Some traders will say, I'm looking for a dip of a certain percentage. Some traders will say, I want a retracement. Maybe it's a 38%, 50%, maybe it's a 62% retracement of a last major move. Other traders might have a technical level that's calculated by some process, right? Where they say, hey, this is a support level based on this criteria, and that might be their dip. Other traders might use volatility like I do and say, look, a dip could be the hourly price movement range. When I move to a 60-minute time frame or a daily time frame, the dip could be the 34 EMA wave. The dip could be the daily price movement range. So there's a lot that we can look at as dips, right? There's a lot we can look at in terms of what a dip could be. So I guess I'm here to say, BLP, there's no one way, right? That'd be pretty arrogant of me to say. There's no one way, but there are objective ways versus subjective ways. And everything I laid out to you are different objective ways so we can use the consistency of saying this is what a dip is. And then most importantly, the predecessor of that strategy must be a trend. So thank you as always. All right, next up, I might have answered this earlier. Do I think we're starting a Santa Claus rally now? Santa typically, BJ, is going to be the last week of the year. Some traders will expect it to roll into the first few trading sessions of the new year. But for me, I would look at the Santa rally as between the 22nd, so this Friday, to next Friday, the 29th. All right. Nilesh asks, TXN is below 4%. Do I see more downside potential? What's the value of 4%, right? So I'm sure there's a reason you mentioned 4%. What's the value of 4%, right? Now, you're talking about TNX. TXN is Texas Instrument. You're talking about TNX, the yields. So again, you have to ask yourself, what's the value? Okay, thank you. You have to ask yourself the value. Why 4%, my friend? What is the value of 4%? Remember, and this is a great question. I love that you asked this, Nilesh. If you're looking at the 10-year, right, or even the long bond, 30-year, the reason that the higher yields are quote unquote bearish to equities, and this is such a misunderstanding, because there have been traders running around fear-mongering all year long to no avail, telling everybody because TNX is up, that means that the NASDAQ and the equity markets are going to come crashing down. Pretty sure the NASDAQ punched up to higher highs, right, from November to December, and it's been in an uptrend almost all year. So the thing to remember about yields being bearish to equities, or even bullish, but let's talk about what's been talked about most this year. The reason yields can be bearish to equities is because a segment of traders will say, where can I put my money and get a return, right? Now, if they can buy stocks and get a return because stocks are in an uptrend or because dividends are competitive with whatever the yield is on the 10-year or the 5-year or the 30-year or the 2-year, whatever it is, if it's competitive. So it's not about the trend in treasuries, it's a threshold, right? Does that make sense, gang? It's really a threshold. And when we talk about thresholds, we're talking about at what point, when I look at the yield of an uptrending stock or the dividends versus what the 10 or 30-year can provide as a return, at what point does it become competitive, right? So remember, it's less about the trend, more about a threshold until those thresholds are reached. And it's really hard to hit those thresholds when equities are moving higher, right? So I don't make that 4% anything magical. I ask myself, what yields out there would 4% compete with? And then I would look to those sectors. So XLU, XLRE, XLP, individual dividends, right? Does that make sense, gang? So a lot of things get discussed in a very broad sense, but the details do matter. And so trends, not thresholds when it comes to yields. And again, It's panned out that way all year. The TNX has not been a harbinger of doom as quote unquote predicted by so many, right? TNX is just reflecting what 10-year is doing. 10-year, when it crosses the threshold, might then be appealing to see flow, to see money into it versus equities. That's it, right? So think about that competitiveness, because that's what the markets are. Everything is competing for attention and for dollars. Where attention goes, dollar flows. All right, gang, as always, thank you so much for being here for Charts and Coffee. Thank you for having open minds. Thank you for questioning what gets repeated so often with so much bravado, with little evidence that it works. That's so much of what happens in the financial space. So thank you for being here, and I will see you tomorrow. Same time, same station.